Good night, guys. Get home safe.
All right, good evening, everybody. It is Thursday, and I believe it is actually the first official day of fall. So hopefully everybody had a good first official day of fall, or maybe it's at 9 o'clock, I think, the official time it starts. Anyway, so it's going to be a very, very short stream tonight. We're probably only going to be streaming for about 1 hour. I do have to get an earlier bus. I have to be somewhere very early tomorrow morning, but tonight we are going to be talking about the currency markets. Now, obviously, over the past couple of live streams when we were in New York, we've been really doing a deep dive and a deep focus on the strength of the US dollar. So right now, I think as of today's close, the Dixie closed up to about 111. And these are multi-decade highs here, and this could mean extreme trouble for foreign markets, especially emerging markets. So we're going to talk about the specific ramifications of a very strong dollar. We're going to talk about some of the really egregious things that could potentially happen. But for a little bit of homework tonight, since we are only going to be streaming for about an hour, I want everybody to look up the dollar milkshake theory by Brent Johnson. Now, I wanted to do the live stream dedicated to that specific economic theory, but unfortunately we just won't have time to cover it all. But we'll talk about that. Markets sold off extremely hard today again after that really hawkish speech by Fed Chairman Jerome Powell. And I think this just goes to show that we can't fight the Fed here. Fed Chairman Jerome Powell was very clear in his verbiage, essentially telling everybody that they will not stop, they will not pivot to cut interest rates. They are going to continue with quantitative tightening until, quote unquote, the job is done. So we'll talk about that. But first, let's see who we have in the chat tonight. I see NG, I see Dan Zhang. What's up, Dan? Good to see you, NG, as well. Vinny Castellano, Uncle Car Guy, says, hey, Tom, will we see any nice cars tonight? You know, I think there's something going on at the FTX Arena. There's been a ton of traffic here in downtown Miami almost all day. So hopefully we'll see some interesting vehicles tonight. Good to see you, Uncle Car Guy. Austin City Limits is here. Melee says, good evening, Tom, from Scranton, Pennsylvania. Welcome. Billy says, happy Friday, Junior. Good to see everybody. Lonnie says, hello. Welcome, my friend. So for those of you who are unfamiliar with the Miami streams, we are standing right outside the 200 Southeast Financial Center. And on the 21st floor is actually the main WeWork office, but the entire second half of the WeWork is now bought out by Citadel Securities, and that is where their temporary offices will be until their massive building is built in Brickell. Mike C says, Tom, to get to 4.4% Fed funds rate by the end of the year requires at least one more 75 basis point increase. Yeah, I think we're gonna get it. Look, I mean, we did the live stream last night sort of doing that recap of the Federal Reserve or the Fed Chairman Jerome Powell's speech. And I think it was very, very clear that there's going to be no pivot. And I think you saw that continuation in selling in equities today. So broad-based sell-off across the board in the NASDAQ, the S&P 500, and the Dow Jones Industrial Average. But before we get into that, everybody, so supposedly this really, really ugly and abandoned building right here that's located right outside the 200 Southeast Financial Center, supposedly this is going to be completely demolished. And there's going to be a massive, it's just going to look like an insane development. And one thing that's really interesting is Action Kid did a video sort of explaining exactly what is going to go up here. I think it's called the new Bayfront Marketplace. And his video is actually featured in the new Miami online magazine. So you guys should check that out. It's going to be absolutely insane. You know, I'm not sure when they're going to do the demolition there, but supposedly it's going to be one of those super tall, high-rise buildings. I think multi-use. So I think it's going to be a combination of office space as well as retail and residential. But supposedly the building that's going to go right here when this is demolished is going to be just a little bit shorter than the One World Trade Center. I can't even imagine how that's going to look. I mean, the Southeast Financial Center is pretty tall, but it's nowhere near as tall as any of the buildings in New York. So going to be interesting to see how that plays out. Hey, Gregory is here. Good to see you, my friend. FredX, welcome, welcome. Golden's Dawn says, hey, Tom, cool building. The Financial Center and the WeWork office. Yeah, I think we started the stream, I think, inside the office yesterday. But tonight we're going to be walking to the FTX Arena. And once again, the live stream will only be about an hour, but we're going to be talking about a lot. We'll cover a lot. In the distance, this is the Miami Tower. Very famous building. Also known as the City National Bank building. Hey, Ann R is here. What's up, Ann? Steph Wright is here. Welcome, welcome. Sunshine After Rain. Good to see you. Mike C. So, aside from the equities market, I think the biggest movements across financial markets today were in the bond market. Now, we always talk about on the stream that the stock market derives its value or is a derivative of the debt market. And that 10-year US Treasury yield absolutely went on a tear today. I think closing at 710%. And many people think that we're going to be closing in here on a 4% 10-year US Treasury yield, which would be absolutely insane. And this is very concerning because this is very, very unstable movements in the bond market that I think we all need to pay close attention to, because as yields go up, generally speaking, you know, bonds go through a massive sell-off and equity should come down as well. And that's exactly what we saw today. We did get some housing data, which we'll talk about. Hey, Clark Rumsey says negative yield curve. Yeah, I mean, we have an extremely, extremely inverted yield curve, which usually follows a recession. I would argue that we're already in a recession. You know, it was interesting when Fed Chair Jerome Powell was speaking yesterday. One of the things that he was saying is, you know, I don't know if we're going to get a soft landing. I don't know if it's going to be a hard landing. I don't know if we could, you know, manage our way, or if the United States economy is going to fall into a recession. I mean, isn't it obvious that we're already there? Now, I mean, many people would argue that we're not, because the unemployment rate is so low, and I get there's many nuanced things that go into account. This is the Metro Mover, by the way. Hey, Ren 10, this is Tom. That Stanley Druckenmiller interview with Alex Karp was very sobering. Yeah. So I think I posted that interview in the Discord. Very, very good interview. FredX, good to see you. Hey, Mark Davis is here. Hey, Tom, hope all is well with you. Good evening from Toronto. Good to see you, Mark. Thank you for joining tonight on this very short stream. Steph writes, as I saw a program about USA on the topic of working and homeless. People work full-time but live in their cars because they can't afford rent/bills. You know, that happens more often than you think, especially in a place like Silicon Valley. So I think I may have seen that exact type of documentary series that you're talking about. You know, many people are buying these, I guess, what do you call them? Like those RV Sprinter vans, and they're actually living out of the back, which is quite strange, but it's true. That does happen, which is definitely not good. Hey, Clark, I love the Alex Karp interview. Glad you enjoyed it. Dubs says, good evening from Los Angeles, California. Welcome, welcome. Good to see everybody. Rock Chick says, is Miami dead or is it just late there? I think a combination of both. So downtown Miami right here is a very residential area. So these are more like office buildings and apartment buildings. Where you see a lot of foot traffic in Miami is in Brickell, which is all the way the opposite way. So that is where a lot of the restaurants, I would consider like the nightlife. However, if we turn right and we cross this highway, we will hit Bayside Marketplace. But this particular location of Miami, there's very, very little foot traffic. Also, another thing when I moved here to Miami, one of the things I noticed is that almost everybody here drives, right? So it's not like New York City where, you know, the majority of people rent an apartment and then they just walk everywhere or take the subway. You can live in a very densely populated place like Miami, but every single person here has a car, which I found quite interesting. So if you notice, all these parking lots are packed and the traffic is quite insane sometimes. But we're going to continue to walk up here. You'll see the FTX arena. Now, I think as we talk about interest rates going up, I think one of the important things to think about are the effects not only on the equity market, but on the average everyday citizen in the United States. So the number one thing I think about is the rates on credit cards. So as the Federal Reserve continues to raise interest rates, you know, that has ramifications throughout the entire economy, not only on the valuation of equities. So if you look at, I believe, the average interest rate on a credit card was about 16% back in, I think, March, earlier this year in March. Now that the Federal Reserve has been continuously raising interest rates, the average rate on a credit card is about 18%. Now, this is really bad news because if you look at the data, I believe the average American carries about an $8,500 balance on their cards. So a 4% move is very, very significant. So the one thing I would say, this is the Bayside Marketplace Ferris wheel, by the way. So the one thing I would say about that is if you have a lot of high yielding debt or high interest rate bearing debt, I would focus on paying that down as fast as possible and as soon as possible. However, let's say if you have a mortgage or something like that where you locked in at, you know, sub 4%, around 3% or something like that, I think you could probably deprioritize that and really prioritize getting your higher interest rate debt paid off, especially if it is vulnerable to rate fluctuations as the Federal Reserve is raising rates. So this begs the question, do we think, or when do we think, these interest rate hikes will start having a significant impact on consumer spending and consumer behavior. I'll give you guys a shot of where we just were. So this is the Citibank building. Over here is the Intercontinental Hotel, which is a very, very famous hotel here in Miami, in downtown. But once we cross the street, you're gonna be able to see the other skyline, which is I would say the newer skyline in Miami. You'll see the One Museum Tower, which is one of those super tall luxury apartment buildings, which I believe David Beckham has a unit in there. TMB says don't put anything on a credit card that you can't pay off in a month. Yeah, I mean, in theory, that is what should be happening, right? But unfortunately, what we've been seeing is a lot of Americans are using their credit cards essentially to live off of, right? Especially in troubling times. If you were unfortunately laid off or something like that, the data suggests that more and more Americans are holding higher balances on their cards. You know, there was even a very bizarre, I would say, maybe using a different word, but very strange interview. Well, I shouldn't say interview. Well, the article was interviewing a few people that aired in Bloomberg. And essentially the article was all about people using these buy now, pay later platforms to pay for bare essentials or necessities such as food, toiletries, and the like. Now, I remember when these sort of buy now, pay later platforms like the Affirms first started to come out, and a lot of the utilization was for things like electronics, things like, you know, large purchases that you could just amortize over maybe 2 or 3 months without any interest. But we're starting to see a divergence or a little bit of a shift here from people spending on those particular big ticket items to, you know, just buying groceries, which is a little bit troubling, but we'll go into that. If you look at this building that's all lit up here, this is called the, I'm blanking on the name. I've been in New York way too long, but this is the Paramount building. And I think this is the building that has the most amenities in the entire North America. So it is an apartment building, condominium complex, but I think it has multiple swimming pools, multiple gyms. It is really, really crazy. And they just completed this high-rise apartment in Miami. And I think right next to it is going to be the brand new Waldorf Astoria building. Hey, Dusty Cole, good to see you, my friend. Hope you're well. Hey, Lee says that's because credit card interest used to be tax deductible, says Lee. How many people you think actually took advantage of that, though? Because if you think about, I guess, as you move down the ladder of, you know, income and, hold on, I'm getting a text from a client, so let me mute that. I wonder how many people actually would utilize something like that. But who knows? So this is the front of the Bayside Marketplace. We'll just do a quick lap around. I'm just watching the time because I only got an hour tonight. But I just want to dive quickly into, I guess, some homework. And for when we have a little bit longer stream, we'll do a little bit of a deeper dive. But we've been seeing this massive strength in the US dollar as of late. And it is very concerning to me because this could potentially cause some sort of global contagion and catastrophe. And what I mean by that is, as interest rates start to go up, that generally makes US debt more attractive. And what do we just see today? That 10-year US Treasury yield from yesterday went from 3.5% to 3.7%. So it's causing a suck of all this liquidity back to the United States. The dollar is at 111 right now. It may be at 112. So the problem is a lot of these other emerging market currencies are devaluing versus the dollar. But here's the problem. A lot of emerging market countries and countries abroad have massive amounts of dollar-denominated debt. So herein lies the issue. When you have massive amounts of dollar-denominated debt, but your native currency is being devalued, it's going to take a lot more of your devalued currency to pay off your dollar-denominated debt or service that debt, which could potentially down the line lead to a wave of defaults. And we're seeing this in some very, very, I would say, smaller pockets of emerging market economies like Sri Lanka right now, some smaller countries in Africa. And I think this is a trend that we need to stay hyper focused on, because if it really starts to play out and each domino starts to fall and we see this wave of defaults across emerging market economies, it's going to have a self-perpetuating effect where the dollar just continues its meteoric rise and crushes all other currencies that it's compared with. And this could cause massive contagion. Now, I'm not saying this is going to happen. I think it is possible, but if you want to learn a little bit more about this specific theory, the theory was actually, or I should say the thesis was actually brought about by a gentleman that goes by the name of Brent Johnson. And the thesis is called the dollar milkshake theory. And I think he formulated this thesis, and I think he has a pretty substantial, in his fund, I think he has a pretty substantial long position on the dollar and maybe short a couple other emerging market currencies. But check it out. If you go to YouTube or just Google it, you could read the thesis and you could actually view his positions. But it seems like exactly what he has proposed is just starting to come to fruition. So please check that out. It is called the dollar milkshake theory. And we'll talk about it on another stream. Hey Daryl, it's 59 degrees in Chicago, Illinois. That's cold, man. That's really cold. I think it was like 90 degrees here in Miami. It was extremely hot today. Hey Vincent NYC says, did you swap apartments with Action Kid? Yeah, we did. We did a quick swap. Hey, Melee is here. Says hello, Tom and everybody. Good to see you, Melee. Welcome. Maria's here. Says hi. Good to see you, Maria. Hello. Vinny Castellano is joining us from Staten Island, New York. Good to see you, Vinny. Sally says, Tom, it's cold now because it's the fall. Yeah, but here in Miami, it's I think it's going to take a couple more weeks until the humidity actually finally breaks. It broke a little bit today, but it was still very hot, especially from like 2 o'clock in the afternoon till about 4. It felt like 90 degrees. Wow, FredX says it was 44 degrees this morning where you are. Wow. So this is the Bayside Marketplace, and you'll see all of the boats here docked at the marina. But this is what I like to call the second skyline of Miami. I would say it's a little bit newer. So this is the Paramount building right here. But this building all the way over here, which is actually where we're gonna walk to because I gotta get the bus. Unfortunately, I gotta get a little bit earlier bus. But this is the 1000 Museum building. And I believe there's actually a helicopter pad on the top of the building. So if you're a tenant and you have, charter service, you could actually take a helicopter back to your own building, which is extremely wild. Sometimes during the day you can see dolphins jumping out of here, which is pretty nice. Vincent NYC says, how long will SPY by end of this year? Or could you rephrase that? Hey Julia says, any words of wisdom for us new investors? I'm panicking a little bit. Well, I think it's just I think the most important thing is to understand monetary policy. And I think the best thing to do in these times is study history of monetary policy under different Fed chair people, right? So we had Fed Chair Jerome Powell right now. We had Ben Bernanke. All the way going back, we had Paul Volcker. So I think in order to really understand, especially in this sort of debt-based system that we're in, I think in order to understand where asset prices move and why they move, I think it's important to study the past. So what I would do is I would study the period of the 1970s into the early 1980s, right? And understand in March of 1980, what did Paul Volcker have to do to sort of kill off inflation? And even though he was successful in doing that, what were those specific ramifications? And I think, now nobody could really predict the future, but based upon what Fed Chair Jerome Powell said yesterday, I think we could sort of be replaying a 1980 style type monetary policy, which is we're going to bring interest rates so high, and the Federal Reserve does not care if they break something. They're going to do it at all costs in order to get inflation back down to their 2% target. And this is exactly what Paul Volcker did back in the day. You know, in March of 1980, the United States was battling about 14.5% inflation. And we just had gone through a period of stagflation, which was extremely, extremely slow to negative economic growth, while prices and inflation continued to rage. So one thing I'd like to say about last night's speech by Fed Chair Jerome Powell. Yes, we understand he raised interest rates by 75 basis points. Yes, we're probably going to get many, many more interest rate hikes. But the FOMC has materially brought down their estimates for GDP growth in the United States to I think 0.2% in 2022 and about 1.2% for 2023. So that is substantially below trend. Now, if the estimates are that the United States is going to grow at below trend while inflation is ramping, well, doesn't that sort of remind you of the 1970s? Well, maybe and maybe not. But I think that's exactly what Fed Chair Jerome Powell is trying to prevent, is a 1970s style stagflationary environment. And I think that's why he's so adamant about raising rates. Now, you could agree with him or not. I don't think that's really the point. I think the point is understand the type of monetary environment we're in, which is extreme tightening, and how to best position yourself for that type of environment. And I think just by studying history is the best thing we could do. Study former Fed presidents, see what they've done. Hey, Zozo Bob says inflation was really bad then, but I don't think that we'll see that level again. Yeah, and Zozo Bob, a lot of very, very notable fund managers and economists on Wall Street agree with sort of your thesis, right? And there's been many, many people that are bashing Fed Chair Jerome Powell for being as aggressive as he is in raising interest rates, right? I guess the type of verbiage you could call it is tightening into a recession. But at the end of the day, I don't think it's only fair to blame Fed Chair Jerome Powell, right? We've had incredible amount of fiscal mishaps along the way as well. And it seems like anytime that the federal government is, I would say, derelict perhaps in their duties in spending, somehow that always comes back to bear responsibility on the Fed, which I am a huge, huge critic of the Fed. But it's not all of their fault. I think the fiscal side of the house has to share some responsibility as well. Mike C says, Tom, you said it in the past, you're not deeply invested in the market. Are you still holding cash? So in my retirement account, it is 100% long and 100% invested. But in my actively managed account, which is like my long short portfolio in which I try to actively beat the market, I'm almost at 100% cash right now with that. So this is my favorite building actually in downtown Miami. This is the Freedom Tower. It is a incredible building. It has so much meaning for those of you who are unfamiliar with the building. I believe this is the first building where all of the Cuban immigrants first arrived to the United States. So it's always an amazing building to look at. Let me see if I can zoom out. Bob says, remember too that we never had to experience something like COVID and the economy. Yeah, I mean, it's always something, right? There's always some crisis that I shouldn't say requires a huge injection of liquidity, because many people, including myself, are more along the lines of the end the Fed movement, if you will. But at the end of the day, I think this is why it's really important to just hear that dollar milkshake theory out, right, by Brent Johnson. Because essentially what he's saying, and to sort of piggyback off of what you were saying, is that ever since the lows of 2008, not just the Federal Reserve and not just the United States, but around the globe, we've been pumping so much liquidity into financial markets, right? So you have this toxic soup of foreign currency and US dollars floating around in the global economy. But here's the issue here. The vast majority of goods and services and products and services, whatever you want to call it, are priced in US dollars, okay? And there's a huge amount of outstanding dollar-denominated debt that a lot of these emerging market countries hold. And the problem is, and I think this is what caught many investors and many people all over the globe off guard, is, okay, the United States is printing so much money, right? The United States is printing money like it's fun coupons and throwing them out to everybody. So you hear all these stories that the dollar is going to go to zero, the dollar is garbage, cash is trash, all that narrative. That's all well and good, but even though we've printed all of that money, all of those dollars, there's still a massive amount of global demand for dollars, right? Especially if you are in an emerging market country, or you're a government, an emerging market government, where you have to borrow US dollars to fund different ventures within your country. And as the dollar goes on that meteoric rise, and part of the reason why I think the dollar is going on a meteoric rise is because the Federal Reserve is starting to tighten or suck liquidity out of the market. And that's making bond yields quite attractive for global investors. So a lot of that liquidity, right, is getting sucked back in the United States. And it's a real big issue when you're an emerging market country and your dollar reserves are dwindling. Your native currency is being devalued, and your existing dollar-denominated debt is becoming more expensive to service by the day. And that could cause defaults and worldwide contagion potentially. So this is the FTX arena. Looks like somebody is playing here. I'm not sure who. But this is where the Miami Heat play basketball. I'm not sure if we could walk all the way up there because it is blocked off, but I'll try to give you guys as best of a view as I can. Hey, Clarence Jackson, this is Tom. Jamie Dimon said, I don't think you could spend $6 trillion and not expect inflation on Capitol Hill yesterday. Yeah, so Clarence, I also saw Jamie Dimon battle back and forth with, I forget what the congresswoman's name is. I forget her name. She's one of the five. I guess they call them the five. I'm not really big into politics. But essentially what she was saying is, okay, starting today, banks are no longer allowed to provide financing to oil and gas companies, starting like today. And I'm like, the way she said it, it just sounded like she was so misinformed. And look, I don't think she's trying to be malicious. I really think that she's trying to do the right thing. But I just think she's very misinformed about how financial markets work. And so she had asked Jamie Dimon a question. She's like, okay, Mr. Dimon, what is your go forward strategy, or do you have one, to stop lending to oil and gas companies? And he's like, absolutely not. And he's like, if we do, it would spark hell for America, which is absolutely true. Now, my take on climate change and this whole ESG thing is that it's mostly, and again, let me sort of finish my statement because I know there's going to be a lot of people that are going to barrel down my throat. Most of it is utter nonsense. However, I do think that we need to work together to reduce our emissions as a country. But that's going to take time, right? When you say grandiose statements like, we have to stop financing oil and gas companies today. Okay, it's going to stop today. Like, that's just like placating to your audience, and that's just being like a little kid. And I'm not trying to be mean when I say that, but it's obviously we can't just turn off the spigot and stop financing oil and gas companies right now, especially as Russia is invading Ukraine. You do it gradually over time, right? And you allow these fossil fuel companies to invest in the infrastructure for renewables, and that may take 20 years, right? So if you do it in a sustainable way over time, then yeah, I think everybody is on board with that. I mean, who wouldn't want to be on board with that? But when you do it in such a way where you sort of show your financial illiteracy, it really doesn't do the country any good, and it just sort of polarizes things, and it actually makes your case seem more ridiculous than it is. Double Eagle says 100% agree. Nicholas P says facts. Billy says Rashida Tlaib was the person. Yeah, and I honestly don't think she means to be malicious. I honestly think she has good intentions. I really honestly do. I think the vast majority of people that serve as a politician, they have good intentions, but some of them could have deep distortions, which I get. But I think in her case, it's more along the lines of really not knowing what she's talking about. And I find it funny that she's sitting on a banking committee. But look, I think she means well long term, and I think everybody would agree with that unanimously, to say, look, we want to reduce our emissions. We don't want to pollute, right? We don't want to just crank out fossil fuels. But if you just turn off the spigot altogether, what you actually do is create an environment where there's actually more carbon emissions. Now, if you remember 6 months ago, we actually did this live stream where I had said a lot of this ESG stuff is actually going to cause a short-term time frame where there's actually more pollution. And the reason for that is, if you try to transition too fast, what you're going to have is energy prices spiking almost to the point of uncontrollably, which is exactly what we saw. And it's not like you can, fire up to drill for oil as fast as you could, let's say, put a coal-fired power plant back online. So when prices of energy skyrocket, you have to use very, very old, outdated, and horrible forms of energy production for the environment, which is coal-powered, to sort of bridge that energy gap. And that's exactly what we saw. So China is actually building more coal-fired power plants today than at any other point in history. Germany is firing up their coal power plants to try to bridge that gap, to prepare for essentially what's happening with this winter. Hold on, I got to turn off my text notifications. I'm getting blown up here. Sorry about that. I gotta make sure to put my phone on do not disturb. It's extremely distracting when people are texting me. But yeah, so in the short term, I'll show you guys this view over here. This is one of my favorite views in Miami. So in the short term, when you go too full bore, saying shut down all fossil fuels, shut down all power plants are evil, and only go solar powered and wind power, well, we don't yet have the infrastructure ready in the United States to harness a lot of that power. Now, you can produce a lot of energy with wind and solar, and they're absolutely fantastic forms of energy production. It's all about the storage, right? It's not going to be windy every single day. It's not going to be sunny every day. So we don't yet have the battery technology to harness that power, to use it at a later date. But the good news is that type of technology is coming, right? But it's going to take a while. So you can't go, to polar extremes, watch a couple, fear porn climate documentaries and say, look, we need to shut down everything and we're all going to die. Okay, that's just not sustainable. It's not doable. I think it's even a little bit irrational and childish to think like that. If you were to lay down a normal, reasonable plan, you would get people or bipartisan agreement here saying, okay, in 15 years or 20 years, yeah, it's more doable and more reasonable. But right now, today, to use her words, it's just not real. So why even bother talking about it? Anyway, let's see if we see any dolphins here. Let me check out the chat. Hey, Abdullah is here. Good to see you, Abdullah. Welcome. I see Sabrina Fair. Good to see you, Sabrina. Hope you're well. Exploration says we need nuclear power. Yeah, I mean, if you want to really achieve your goals of being carbon neutral, carbon zero, nuclear power is the way to go. And it is extremely, extremely safe now too with third generation nuclear. Kirby says, do you agree with the times? Time in the market is better than timing the market? Or do I agree with that saying? So I think generally I do agree with that saying, Kirby, but here's the thing. If you were managing or actively managing other people's money or your own money, I think you need to have at least some sort of a risk management wherewithal, right? I think the people that just say, don't do anything else, but just consistently buy the market no matter what, I think that is a little bit unfound. And the reason why I say that is, imagine if you did that same thing and you were in Germany or you were in Japan. How is that working out? Just aimlessly dollar cost averaging into an index. In America, it's a different story, right? Because we are the world's superpower, and we essentially set the standard for the rest of the world to say, if you want to come here, it doesn't matter where you're from, you can have an equal opportunity to create a business, to enrich yourself and other people around you. And we have free markets. And I think that's why our equity market outperforms, because we attract the world's best talent to make the world's best products and services here. So generally over time, corporate profits in America will continue to grow. And I do agree with that narrative. So, but I don't think your only portion of your portfolio, your net worth, should just all be tied up in buying the market aimlessly at any time. That I think is a little bit ill-founded, but maybe I'm wrong. I'm not the end-all be-all. I have a portion of my retirement. Wow, check this out. So this is the, man, that's one of my, I think that's one of my favorite buildings ever. So this is the 1000 Museum building here. This thing is insane. So I think a portion of my retirement, right, in my IRA, is just 100% long in an index fund that tracks the S&P 500. And I don't even look at it. I don't even know how much is in it, to be honest. I know roughly, but I don't look at it every day. But my actively managed portfolio, I'm not long in this market. I'm actually probably almost 99% cash. This is some of the highest cash levels I've ever had. I've been pretty chopped up this year. So I think you need to risk manage in certain circumstances. I think it's appropriate to risk manage. Hey, Stephanie is here. Good to see you. This is so beautiful. Welcome. Good to see you, Stephanie. But yeah, Jamie Dimon really went off in the on the Senate Banking Committee. You know, Jamie Dimon, I believe, also said something about cryptocurrencies, saying that the vast majority of them are Ponzi-like schemes, which I would agree, and I think I've said that many times on the streams. Now, however, I am extremely bullish long-term on some cryptocurrencies like Bitcoin specifically, but I think a lot of these other alternative coins, I think they just have outright malicious intent, in my view. And I think number one, besides them being Ponzi schemes, I think the SEC is going to classify them as securities. So that is another reason why I do not sort of touch them. So let's see if we see any dolphins here. Usually right up and down here, if you look really closely, you can see dolphins running in and out of the water. Hopefully we'll see some today. But this is right behind Bayside Marketplace. So this is Bayside Marketplace, and then right here is right behind the FTX Arena in Miami. Hey, Luis Cesar says hello from Brazil. I love Miami. Good to see all of our Brazilian viewers. Yeah, Miami's a fun place. It's definitely beautiful weather here. You know, last night we were in the Brickell neighborhood of Miami, so this is actually farther north. So if you continue north over here, you'll actually hit into Edgewater, which is a very, very nice neighborhood. And if you go further north than that, you'll hit into the Wynwood area of Miami. Andres has just watched the clip. Talib acted like a nasty brat. Yeah, I mean, and look, I tend to be I think I'm a reasonable person, right? Look, I think she's just very passionate about her opinions, right? And her job is to represent, you know, the people that elected her. And I get that and I respect it. Now, I may disagree with pretty much everything that she has to say. If I could give her a piece of advice is, you know, you're sitting in front of the most powerful bankers in the world. You know, obviously they do need to be regulated. And I'm actually going to make a point that I was actually quite displeased with. But I think she's not an economist, right? She doesn't have a financial background, and I think it shows. So I think listening would be a little bit better than just to say, we have to stop lending to oil and gas companies like today. When she knows it's just not possible, right? I don't like when people ask questions that you just know it's like impossible. So, I don't know. Hey, Alejandro says if you see Beckham, send my greetings. I definitely will. Lee says, Tom, there's over 5,000 cryptocurrencies. The technology is not patentable. Yeah, well, I think people tend to spin up these cryptocurrencies, especially a lot of these like Ethereum-based ERC20 tokens, as you'd say. And I think a lot of it is used for nefarious reasons. Ooh, I think we got a dolphin. I just saw something jump out of the water right here. I think I missed it. Hey, Clarence Jackson says, I was at David Rubenstein's event this week, and he said Bitcoin is here to stay. Yeah, I mean, I think that is my view, and I could be wrong, right? I could be wrong, and you know, all of my net worth that I have allocated to Bitcoin could go to zero, right? And I sort of taken that risk, but yeah, I mean, I can't tell you guys what to do, but I just would not play around with a lot of these altcoin stuff. Hey, Roberta says, maybe because oil and gas companies just made trillions off of our misery. What do you mean by that? Could you expand a little bit? Billy says, yeah, like every time I pull out my iPhone, people ask. Interesting. All right, I'll give you guys another view here. Hey, Points Traveler says, my wife and I were boating where you are last week and saw 2 manatees. Keep an eye out for them. Dude, that is awesome. Manatees are probably the most beautiful creatures on the face of the earth. You know, if you go further north near Sunny Isles Beach, there's a ton of manatees, like a ton. Lee says it's here to stay until the US government comes out with its own and outlaws the others. Yeah, well, I mean, that's the interesting thing about JP Morgan, right? So a lot of people don't know JP Morgan actually has their own form of digital currency. I think it's called JPM coin, but they use it to exchange dollars, right? It's sort of like a faster and cheaper intermediary to exchange dollars. So I think there'll probably be down the line like a central bank issued digital currency. But I would argue, I mean, many people that are resisting sort of the transition to digital dollars, so to speak, I would argue we've already been there since around 2016. I mean, for example, I never ever pay with cash ever. I use Apple Pay. You can use your credit cards. That's a form of digital exchange. And if I had to bet, I would say 25 years from now, we're going to look back and we're going to be like, that is crazy that we would actually give people physical pieces of paper back and forth. I think we're going to look back and think that's absolutely crazy. Clarence Jackson says Jamie supports blockchain technology. Yeah, I think he's making a ton of money off of it too. Look, I think Jamie Dimon's a smart guy. Again, the final thing I'll say about that banking committee is I think the United States in general would get a lot more done as it relates to achieving their climate goals if they set realistic and honest goals. But obviously politicians are motivated by getting votes. So if you jump up and down and say, oil and gas companies, they're evil, everything's evil, and we're going to just shut off oil production tomorrow, that gets people that really don't understand financial markets and economics quite riled up. But if you just level with the American people and say, look, it's impossible, you can't transition off of oil and gas in a year. Millions of people would die if you shut off the spigot. But what you can do is you could provide additional financing and incentivize companies to invest in renewable infrastructure. And then over time, you can make a clean, easy, and normal transition, which I think everybody wants. I want that. I think, I don't want to speak for everybody else in the group, but I think many people in the group would want that, right? We want cleaner oceans. We want cleaner air. I think that's obvious. But we need to be honest in the way that we could do that. And just, screaming up and down and saying everything is evil and, don't let them drill on federal land. Not one oil company is going to drill on federal land. I mean, that's just obviously just a lie. So, and it goes both ways. I saw a really good comment about the housing market. Let me see where that was. Hey, Lewis says, thank you for your comments about the United States. I miss Miami so much that when I discovered your channel, I watched it for the first time yesterday. I got crazy, man. Thank you so much for having this channel. Hey, well, hopefully you can come back to the United States pretty soon, my friend. Miami is a beautiful city, and we'd love to have you here. I'm trying to find that comment about the housing market. I really, really enjoyed that. Sean Connolly says, how high do you see mortgage interest rates going? The Fed chairman seems firm on getting to a 2% inflation rate for whatever it takes. Long way to go. Yeah, I think it is going to be a long way to go. And I think as of today's close, the average rate on a 30-year fixed rate mortgage is about 6.25%. It may actually be a little bit higher than that. I think I wrote it down somewhere. I think it may be over 6% now. Yeah, 6.43%, up 23 basis points from this same time last week. And we're already starting to see the housing market rollover here. Now, we sort of talked about why housing takes a little bit longer to see those price declines than equities, and that has to do with liquidity, right? So, you know, if I own a house, I'll show you guys this building. This is one of my other favorite buildings. I guess we'll walk to the Paramount Tower too. One of the things, let's say when interest rates go up, right? That 10-year US Treasury yield started 2020 near 1%. Now we're at almost 4%. So a lot of these growth stocks, right? Let's just talk about the tech stocks. A lot of them that do not have current earnings, or present earnings, I should say, but have earnings in the future, well, as interest rates go up, their future earnings are now worth less today because rates are higher, right? And since equities, they're not physical pieces of property, they have more inherent liquidity. So Wall Street investors can discount those securities at a much faster rate than you could do housing, right? So that's why you've seen this massive, drastic decline in the equity market, because you have two things that are going on. The Federal Reserve is sucking liquidity out of the system via quantitative tightening. Interest rates are going up. And as rates go up and as money becomes more expensive, what happens is usually estimates for GDP, or gross domestic product, will go down. So the FOMC came out yesterday. Fed Chair Jerome Powell said they revised down their estimates for GDP growth. In 2022, it's about 0.1%. And next year, it's about 1.2%, which is below trend. So as GDP contracts, equity valuations come down as well. Well, with the housing market, those prices don't show up till a lot later, right? Because with a house, you know, you could let it sit on the market forever if you want. You don't have to sell it. It's easier to go on your Charles Schwab account and just, you know, market sell $1 million worth of stock, and the liquidity is there to do it. The housing market takes a little bit, right? So as interest rates go up, one of the things you start to see are homes sitting on the market for longer, right? So instead of during 2020, homes would sit on the market for 14 days and then they would sell with crazy amount of bidders offering ridiculous prices over asking. A lot of that has stopped. Homes are sitting on the market for a lot longer. And once those homes sit on the market for a lot longer, if you're working with a real estate agent, usually they'll say, look, this home is sitting on the market. It's not going to look good. We need to price it to sell. So then they start reducing the price, maybe by 5%, then by 10%. And then, you know, you sort of see those price declines. And we just started seeing that right now. So I think in August was the first time in 14 months that the average home sold for below the list price. I think it was, you know, it wasn't a huge decline, but the average home on the market sold for about 1.2% below its list price. Now, if you pay attention to, you know, the mainstream financial channels like CNBC and Bloomberg, they always are very selective in the data that they show because they want you to focus on the big headline number. So they have you focus on the year-over-year price gains. But if you want to start to develop or identify in a developing trend, you got to look at the month-over-month gains or the month-over-month price action. And we're just starting to see real estate prices roll over and compress here, which is actually very good news for somebody that is maybe looking to buy a home. I think in Q1 and Q2 of 2023, I think you're going to be able to get a pretty good deal. So this is my favorite building in Miami. This is the 1000 Museum. And it is such an interesting looking building. It almost looks like a scorpion. And I believe the first 5 stories, so from here to here, is all a parking garage. Really, really interesting. Hey, Greg Peters is here. Says, hey folks, just touching down in Miami. Greg, good to see you. Thank you for being here, my friend. Good to see you. Mike C says, there's one small problem with me going to Schwab and selling $1 million in stock. Mike, hilarious. Jeff says the house across the street from me has been on sale on the market for weeks. Which is good. And now, many people who own a home, or many people who've been watching the news, it's sort of weird how this whole dichotomy is playing out. I'll give you one more look at the 1000 Museum. Because we've been seeing all of these articles and all of this, I guess, press about how unaffordable everything is. But the minute we get some economic data that shows that prices are going to come down, everybody starts to scream Armageddon. But weren't you just complaining how everything was so expensive and how rents were so high? Don't we want to see prices start to roll over here? And I think this is just a testament to... let me see if I could cross here. I think I gotta wait for the light. But I think this is just a testament to classic market psychology, right? You know, the moment you own something and the price goes down, people start to freak out. Because they're so very short-term focused as opposed to focusing on the long term. Yeah, Alejandro, you're right. This is Zaha Hadid, beautiful design. Hey, Emilio J, this is Tom. Are you familiar with Michael Bordenaro? He has a very informative Florida real estate channel. I am not, but I'm gonna have to check it out. Always love checking out different types of content. I'm gonna check it out. Hey, Russ is the best YouTube channel I watch every night. I no longer cut the TV because I enjoy these live feeds. Hey, thank you so much. Appreciate it. Hopefully you're enjoying a different view. Usually we're streaming from New York City, but tonight we are in Miami. This is also another interesting building here. This is the Paramount Tower. You know, we'll cross over and check it out. We haven't been over there in a long, long time. Usually we spend the majority of our time in Brickell. But I do want to just once again give you guys some homework. And I think this is very, very important and super, super critical because we are living in an environment where the dollar is gaining ridiculous amounts of strength. Okay, so here's the homework, and I think you guys are going to enjoy it because it's very interesting. So I want you guys to do a little bit of research, and maybe if I have time to stream tomorrow, which I think we will. I have to go to a work event, but I'll try to find time to stream. But do some research into the dollar milkshake theory. Okay, now I was gonna drop a link in the Nightbot, but I forgot. Sort of lost track of time. So do some research into the dollar milkshake theory by Brent Johnson. And this thesis sort of piggybacks off of the idea that we've been talking about for the last, I don't know, 2 or 3 months on the channel, with the dollar gaining so much strength. And start to develop an understanding, okay, why is a stronger dollar very, very negative for emerging markets, right? Understand market mechanics, understand, you know, why, since we live in this debt-based system, it almost doesn't work if we have a strong dollar. And we'll sort of talk about that a little bit more in detail on the next stream. But sort of try to understand those different market mechanics and how, with massive amounts of stimulus, not only from the Federal Reserve, but other central banks around the world, why is that now having an impact of this massive liquidity suck back to the United States? And understand why that's going to be short-term very, very positive for the US dollar, but long-term very, very negative for everybody, as we potentially have a global liquidity crisis and face massive defaults. So once again, that is the dollar milkshake theory by Brent Johnson. I think you guys are really going to like that. Hey, Charlie Richardson is here. What's up, Charlie? Charlie, we're just crossing at Northeast 2nd Avenue. So if you guys remember the last time we were in Miami, this was all under scaffolding. So this is completely brand new. So they just opened this walkway here. Everything looks super clean. Before, everything looked like this. I think they're building, wow, this is probably gonna be another maybe super tall apartment complex, something like that. Check out the Metro Mover coming here. Wow, really, really nice. I think there may be a soccer field up here too. Now, we did get some existing home sales data out. So sales of previously owned homes dropped 0.4% in August from July to about 4 million or 4.8 million homes. That is the weakest rate since May of 2020 during the pandemic. August sales, if we think about a year-over-year comparison, oh, this is a soccer field. Wow. This is really nice. I had no idea they built this. Is this artificial turf? It is artificial turf. So on a year-over-year basis, home sales fell 19.9%, so 20%. You know, this reminds me of Chelsea Piers in New York City. Oh, that was a nice shot. Yeah, this is similar to Chelsea Piers in New York City. Yeah, points travelers like jump in, Tom. Yeah, maybe I'll put the camera down and you guys can see me break out my old college soccer playing days. Hey, Lemonade is here. Good to see you, Lemonade. Yeah, all of this is new. I mean, we used to stream here all the time before I went to New York, and this whole area used to be just all construction. So it seems like they're doing a pretty good job with the building. Everything looks super clean. Alejandro's is maybe Beckham's initiative. Potentially, I could imagine. Well, supposedly David Beckham owns one of the top 2 floors in the 1000 Museum building. There's usually, I think there's actually a helipad on the top. So if you want to avoid the Miami traffic, you can definitely feel free to take your helicopter if you want. Hey, photos from around New York says, Tom, when do you think the Fed will end their rate hikes? Honestly, I'm afraid that we are going to be in this environment for quite some time. So I think if we can learn anything from last night's, I guess you could say yesterday afternoon's, maybe would be more appropriate, Fed Chair Jerome Powell's speech at the conclusion of the FOMC meeting. It's don't fight the Fed here. Just get out of the way. You don't need to be buying anything. You don't need to be in the market. They're gonna take this thing to the rafters here, and it's gonna cause massive amounts of demand destruction. And I think equity prices are gonna go materially lower. But again, I could be wrong. But if you look back throughout history, in any sort of quantitative tightening cycle, equity prices tend to stay depressed. But I think we're going to see an environment where the US dollar is going to get even stronger than it is right now. So right now, the US dollar closed at about 111. I would not be surprised, you know, with pullbacks along the way, I would not be surprised to see the US dollar continue to absolutely go to the stratosphere. And if that happens, ooh, this is a really nice Tesla, sort of like a matte blackish. If that happens, we could see, well, I don't think it's going to be good for a lot of emerging markets. You know, I posted on Twitter, if you guys follow me on Twitter, @WalksWallStreet, the movements in the bond market today were so unbelievable. I've never seen anything like it. And even some of my friends who've been in the hedge fund business for 20, 30 years, they've never seen anything. Highs in the 10-year US Treasury yield, really across the entire yield curve, is really, really insane. And now it's making bonds relatively attractive, right? So assuming we have inflation come down to a more manageable or reasonable level, you know, if you could buy the 10-year US Treasury, assuming it's at 4%, it's at 3.7% now. It's actually pretty attractive, So as it relates to the dollar milkshake theory, it's going to suck liquidity out of everywhere in the world to the United States, and it's not good, not good. Oh, somebody says, what do you think about Japan? So I think we are going to hear from the BOJ tomorrow. So Japan is a little bit of an anomaly here. So once again, this is the Paramount World Center. Very, very beautiful building here in downtown Miami. So Japan is, or I should say the Bank of Japan, is an extreme anomaly as it relates to monetary policy globally. So we're seeing the Federal Reserve enter extreme quantitative tightening. We're seeing the ECB raise interest rates. We're seeing the Canadians raise interest rates. Pretty much everybody across the globe is raising interest rates and tightening monetary policy except Japan. Japan is actually pretty much held definitely steadfast as it relates to their extremely lax and easy monetary policy, and that's why we're seeing the Japanese yen at multi-decade lows as it compares to the relative strength of the US dollar. And I think that's going to continue. I think the Japanese yen is going to continue to get crushed, and the Bank of Japan is probably going to have to intervene. I think they actually intervened today to sort of try to stop the bleeding, but I think that's going to continue. Wow. Guys, you remember just three or 4 weeks ago, we were streaming right here, and this building was just a vacant lot. There was none of this structure was not even here all but a month ago. It gives you a pretty decent perspective at just how fast things are going up here in Miami. It actually almost kind of scares me a little bit. Hey, Vinny says Japan just intervened for the first time since 1998. Oosh. Yeah, and I think their currency is going to continue to get crushed. Hey, Eyeglass Lady is here. Good to see you, Eyeglass Lady. Welcome. Points Traveler says the yen will get stronger once Japan reopens next month. The LT Prods is not too many dogs tonight. Yeah, so we're on the northern part of the city of Miami. Usually we are in Brickell, which is the financial district. A lot of people are out. This is the more sort of quiet, a lot of newer developments going up. You can see all the construction here. Hey, RS is here. Good to see you. Welcome. UniJ22 says, thank you, Tom, for a great stream. Good night, all. Well, thank you for joining. And please have a fantastic Friday. Finish the week strong. Yeah, Lemonade says, yes, I remember you stated this building. Looks like they may be building a new one. You know, another part of Miami that's very nice, 72nd Street and Collins Avenue. There's tons of new developments going up there, and usually that is not really the neighborhood you would see these super tall high-rises coming up. But it seems like everything is pretty brand new down here. Points Travelers, there's not many restaurants and retail around here. Yeah, this part, no. Around the FTX Arena, not many retail storefronts. It's usually all of these super tall, like, apartment buildings. A lot of the good restaurants are over the bridge. If we walk over the bridge in like Brickell, things like that. If you don't want to walk, you could take the Metro Mover. This is the Park West station here. And right ahead of us is the FTX Arena. Hey, Allison Williams is watching from Freeport, Bahamas. Really great content, very knowledgeable. Thank you, bro. Thank you so much, Allison Williams, for watching. Appreciate it. Lizzie Hatch says, hey, everybody. Hi, Tom. Closing on a house in Texas, 3.99%. Wow. How did you manage that? That's crazy. So you're talking about you got a 4% interest rate? Points Traveler says, what is going on in the FTX arena tonight? I think it may be, well, I saw somebody in the chat say it could be a Colombian singer. Now, I'm not too sure, but I think that's what it is. Shiva says, cities without people walking on their sidewalks scare the heck out of me. Miami is not for me. Big time New Yorker here. Yeah, I mean, I actually, from walking New York City, we do these live streams. I walk, 3 hours a night in New York, 3 hours here. I kind of feel safer walking these streets. But I don't want to cause a big stir. I love New York. I think it's the best city in the world. But as a safety thing, definitely, I don't feel like I have to watch my back in Miami. Yeah, DWG says Metro Mover is so quiet, love it. Yeah, and it's fully autonomous too, which is fantastic. So there's nobody operating it, nobody controlling it, which is great. Very, very efficient. Ooh, everybody, we are now over time. We were supposed to stream for an hour. I gotta get the bus. It says Botham Jean. Hey, buy the book. Good to see you, my friend. So guys, I gotta run. We have to end the stream a little bit early tonight. I gotta make sure I get home. I gotta be up really, really early tomorrow, but that is the homework for tonight. Obviously we are entering a very, very interesting time in the global financial markets here. And we're seeing bond yields globally spike. We had an unbelievable, unprecedented sell-off in the US debt market today. That 10-year US Treasury yield is now 3.7% on its way to 4%. The US dollar or the Dixie closed up at 111. So check out the dollar milkshake theory by Brent Johnson. And we'll review it and we'll talk about it in a little bit more detail. Now, I briefly explained that I've been sort of going into it over the past couple weeks on the streams. But I think this is very, very critical to pay attention to this here. So if you guys are new to the live stream, feel free to leave a like on the video, subscribe to the channel if you are new. We usually do these live streams about 5 days a week between New York City and Miami. And we would love to have you guys along for the ride. If you want to stay up to date on my thoughts in the financial markets, if you scan the QR code on your screen, punch in your email, you'll be signed up to receive my free investing newsletter where we cover the outlook on not only the US equity markets, emerging markets, fixed income, and the like. And we will see you guys tomorrow. It is Friday. Finish the week strong. Keep a positive outlook amongst the craziness that's going on in the world. And to the mighty bull, have a good night wherever you are, because there is always a bull market somewhere. You just need to know where to look. I'll leave you guys off with a beautiful view of the Freedom Tower. We'll see you tomorrow. Andy, Mike C, Tom, Barry, photos from around New York, Alejandro, Shiva, thank you so much for watching. Greg Peters, appreciate it. Line Sync, Lemonade, Ryan Royal, Eyeglass Lady, FredX, James Dixon, Lemonade, Austin City Limits, photos from around New York. We'll see you in the next one. Take it easy, guys.